Bitcoin is not a speculative asset, despite what you've been told. From where I'm standing, it's a reliability technology. And if that sounds sort of strange, then good. That's the curiosity I'm hoping to instill in you as to why this asset is particularly easy to investigate systematically. This is what attracted me to want to investigate it myself. If you have the inclination, I encourage you to do the same. And you can also do that right along with yours truly. My name is Sminston and you can call me Smitty because a lot of folks have trouble with the pronunciation there. And I'm just going to tell you a little bit about myself and what I'm doing here. This is my first YouTube video, and I think it's good that you and I get to know each other a little bit. I'm a Bitcoin researcher and analyst. I am primarily on X, formerly Twitter. I've got over 40,000 followers. I've been doing this in sort of a public way for about the last year and a half. And I basically break down Bitcoin's price, a lot of other metrics, macro, and I develop tools because I want to put together actionable analyses that allow folks to take action given their own circumstances and given the true nature of the asset itself, which again, I will keep coming back to, is a reliability technology. I hold a PhD in engineering, materials specifically. I have a background in some other stuff, chemistry. I've worked over 10 years in industry, developing technologies to better store energy. So purely technical background. Again, no finance background. I've got many patents in the field that I have expertise in. For over a decade, I've basically been analyzing complex data sets around physical systems. And the other part of my job has been to figure out why things become problematic and fail over time, hence bringing around the term reliability. Why does this all relate to Bitcoin? Well, I've noticed since my time being here, my relatively short time being here, is that I'm not the only one with this sort of background that it has become particularly interested in this space in financial technology. I think the data analysis, failure analysis, the beauty of the system from a data standpoint was a large attractor for me, and I know I'm not the only one there. I've got many mentors and inspirations within the space going beyond just the power law, but certainly the power law has captured my own interest and built my conviction. But as an engineer, I don't see this as gambling. I don't see this as all being part of a casino. I mean, a lot of crypto is. But I look at Bitcoin as a well-built engineered system, and we're able to capture the data from that. Price being sort of a key telemetry for that, if you will. It's a network, right? It's a money network. It's the internet of money. There are many different analogies, which I'm a fan of. But these are things we're going to tackle over time. This is an intro video. So what did I do as soon as I saw, I saw what I saw with the straight line that you can't unsee in log space? Well, I saw that it was a particularly approachable data set, which you could analyze systematically and perhaps make some predictions from, which I know the common wisdom around economics and finance is that that's just not possible. Markets are inherently unpredictable. But I think the more we study Bitcoin and its failure modes, growth, behavior, and its physics, honestly, I think there are some predictions we can make about it. Maybe not in the short term, but again, we'll get to more of that. The thing is, this thing is reliable. It's a reliability technology. That said, I want to present my value proposition for Bitcoin. What problems does it solve, right? The old tropes that it's not backed by anything, there's no inherent value to it, it's baloney. Bitcoin is like if somebody invented a perfectly reliable accountant that was available to you 24/7, could not be bribed, was totally incorruptible, was working for you and for basically anybody else, and working for pretty much nothing relative to the entire value of the network and everybody that he's serving. There's no discretionary control, there's no debasement, and there's no social capture. So essentially, for the lay people, it is an immaculate accountant. This is something that not a lot of people have thought about, but I think we need desperately more than the average person realizes. So I don't think that's a utopian statement. I think this is a pragmatic, engineered invention that was probably one of the most important inventions of the past century. So I always look at this through an engineering lens, of course. I'm looking at uptime, tolerance, probabilities, robustness, and what may or may not lead to its long-term survival. Because I think it is a game changer, not just for those who live in more privileged societies like the United States, which is where I'm from, but across the world. So I'm pretty much all in on this thing. But let's get to the first set of technical content. By the way, in the future videos that I put together, they're not going to be quite this long. I'm going to try to keep most of these between 8 to 10 minutes per week. And the goal will be to pretty much do an overview and cover the analyses that I've done over the last week, but also touch on the things that I think that are interesting and relevant, because things can change a lot from week to week. But yeah, welcome to my channel. Here's a deep dive on some of the work that I've done recently. Today, I'm going to walk you through some key findings from an article that I just recently co-authored with PlanC called How the Business Cycle Quickly Became the Bitcoin Cycle. This challenge is one of the most popular narratives in Bitcoin, which is the 4-year halving cycle. This is sort of the kickoff chart, right? So what you're seeing here is, if you notice the orange line, this is plotted against the ISM manufacturing PMI, the Cayenne line. So orange is Bitcoin, Cayenne is the PMI trend since 2010. Both of these are normalized to their z-scores. So this is the best way to see their concurrent oscillating behavior. How much do they go up together? How much do they go down together? This is an index that's based on a monthly survey that's been tracking U.S. business conditions since 1948, a long time. It's one of the most reliable indicators of what we call the business cycle. Expansions and contractions, which by this index are defined by floating above versus falling below a value of 50. 50 is the midpoint. So the green bands here that you see sort of in the backdrop, these are marking all the economic expansions, and then the red are the contractions. So, first of all, what you'll notice with that backdrop is that in recent years, over the last 3 years, we've been experiencing a particularly long contraction. It's actually the longest contraction, barring a couple of those quick blips above 50 that we've had since the beginning of the index. But we can see here, basically, really clearly, it jumps right out to you. It's the eye test, right? Bitcoin fluctuations are tracking very closely with the business cycle. So when manufacturing is expanding and the economy is growing, then Bitcoin tends to outperform relative to its long-term trend, which is sort of the flat horizontal line. So what do I mean by that? Specifically, you're talking about these fluctuations. So these kinds of fluctuations here, that's an outperformance relative to this trend, right? And then the PMI has something similar. So PMI grows here relative to its roughly 50 level. And then the contractions happen too, right? So Bitcoin has a cyclical nature to it as well. So on the contractionary periods, you can see with ISM PMI, they trend down together, right? So this is the point of this chart. It makes intuitive sense. The expansions mean rising profits. There's definitely a bigger risk appetite. I guess this is evidence that Bitcoin is still largely a risk-on asset, in terms of its ability to manifest these bubbles. So more capital is flowing in, just like other risk-on assets. So looking at 2017, PMI is rising, Bitcoin is ripping. 2019 to 2020, PMI is rolling over, Bitcoin's struggling. So there is some lag here. So the lag analysis is sort of TBD, but going to be doing that here shortly. So that's kind of chart number one. We wanted to delve into this a little bit more and get statistical with it. So what are we showing here? This is an analysis of the Spearman R-squared. So this is looking at the correlation in sort of a different way. Spearman R-squared is basically telling us how much of the Bitcoin's oscillation around its trend can be explained by the PMI. It's a little bit different than the Pearson correlation. I won't get down into the nitty-gritty details, but it's a little bit more of an indexed way of looking at the correlation. So number go higher with Spearman R-squared, stronger the correlation. When we start to cross 0.15, that's really when the correlation starts to become pretty meaningful. I mean, in my book, below 0.1, there's not much there, but it grows by an order of magnitude, which I think is meaningful, right up to about the second halving. So middle of 2016 is when that happened, and lo and behold, it breaks. It almost hits 0.2, and it kind of levels out just above 0.15. So then by the time you get to halving 3, you've had significantly more gains of the correlation. You almost hit 0.25. We hit another price peak right around there, right? We're getting close. So it takes there's fluctuations, right? But I think the key thing that we're looking at here is the long-term trend. So again, leading up to the second halving, this is kind of where the correlation starts to become meaningful, right around this area. And then going into the second halving, I mean, it's significantly stronger. And then as you go to the fourth halving, it continues to trend up. So these dips tend to correspond with right around where the price peaks are, interestingly enough. And again, for for analysis on another day, I do want to talk about how right now Spearman R-squared is downtrending. This is a few weeks out of date. But if our Spearman R-squared is right, let's say it's like around here, what's been happening, what does that say about like where we are in the cycle price-wise? If we have lower to go, if this hasn't started to make the flip around, there's an argument to be made that, we really haven't begun to reach the top. So yes, we're kind of back down to where it's very oversold. That's why the last few weeks of data kind of matter here. But the overall trend here is undeniable. So given the cyclical nature, now what's the argument here when it comes to the halving cycles is that if you look at the inflation rate, the annualized inflation rate of Bitcoin, which all follows a schedule, right? There's some noise to it, but this is the calculated version. It drops a huge amount, right? And the selling pressure drops by over 25% going from halving 1 to halving 2. So the mechanics of sort of scarcity, liquidity, and supply driven price bubbles loses a lot of steam just going into the second halving. That in concert with the rising correlation of the business cycle becoming a larger, if not primary driver, is very interesting. So the big transition here, all in my opinion, sort of starts to take place around halving 2. I'm not saying that the halvings didn't have any impact. In fact, they probably did right up until the second halving. And they might have some very small, but we're talking about, at this point, the inflation rate and the supply cut, in terms of driving those price bubbles, it should theoretically have less than a 1 or 2%, according to this annual inflation rate analysis. So let's go ahead and move on to the next chart. The next one is, now we're looking at the Spearman P cumulatively. The P value tells us what's the significance of that statistical correlation, right? And so similarly, as you saw an inflection point transitioning over halving 2, you see the same thing dropping down below having two. You're going orders of magnitude now, right? We're talking about this is log scale y-axis. So having two, you're seeing a drop of 10 to the negative 1. So anything, I mean, most statisticians take anything below 0.05. So that's 5 times 10 to the negative 2 or lower as extremely significant. So here we've dropped down to about 10 to the negative 4 just after having 2. So it's 2 orders of magnitude. From having 2 to having 3, we dropped another 3 orders of magnitude. So 10 to the negative 4, 10 to the negative 7. So the significance is the rate of increase of significance is increasing each halving. It's something I'm just realizing now. Now look at having 3 to having 4. You're going from roughly 10 to the negative 6 down to 10 to the negative, let's call it negative 14. That's 8 orders of magnitude. So this sort of speaks for itself. You get the idea. These transition points have something to do with price peaks and then going back into bear markets. Now, again, it looks like it's pretty tied up with the halving cycles. But if we go back to the eye test here, it doesn't make any sense that the business cycles would be linked up with Bitcoin's halving cycles, does it? So I think there's a strong argument here that that's a coincidence. This is the whole point of the article, and I hope everybody can read it that's watching. And then there's the Bitcoin power law residual versus PMI regression plots here, right? I think that there's more goodies in this plot than people realize. It's a little bit of an overwhelming chart for people who aren't used to looking at it. But PlanC had this great idea of splitting all the data into 2 halves. So the first half of all the data, 2010 to 2000 whatever 18ish, and then from that point up till now, you've got 2 halves of all the price data. And then you want to check the R squared of it. Now we're talking about Pearson R squared. So this is actually talking about how much of the price fluctuations from its power law trend deviate relative to PMI. And the R squared is telling us how much of the variation there in this model can be explained by the PMI being a driver itself. The first half, it's 0.17, 0.18. In the second half, it's 0.51. That's roughly a 3x increase in explanatory power. That's crazy because what we're doing here, and I'm just going to break down what we're doing here. I think this is an easy way to understand it. Just again, we are taking all of this data. This is the first half. And then the other half of the data is here. So just like the Spearman R squared and p-value analyses are telling us, going through the different halvings, likewise, basically the strength of the relationship is increasing throughout the life of the asset. So kind of think of the average R squared being measured here versus the average R squared being measured here. So the business cycle is becoming a stronger driver all the time of the price deviations. I mean, I think this sort of makes intuitive sense, but I think this is a great way to visualize it. And another takeaway from this is that, again, now we're looking at raw PMI, and here's that 50 threshold I was talking about before. So look at the price. Look at the Bitcoin price deviations in this cluster over here versus the one over here, right? To me, this is insane. So we just printed in, and I'm not, a lot of people sort of misconstrue what I'm saying here and saying PMI is literally a direct driver of the price of Bitcoin. No, I'm saying the two are correlated, and really what the PMI is an indicator itself it's an indicator of business conditions, right? Economic conditions. How many order intakes are we getting relative to ins versus outs? All the inputs that supply chain managers at various manufacturing firms are calculating to see, is their business as a business expanding or is it shrinking? So if they're to the right of this, they are expanding. If they're to the left of this, they are shrinking. Well, until very recent. So again, we've been on this side of things for the last 3 years. Do you understand that, right? And currently, we are in a very meaningful way making a great showing here at about 52.6, somewhere around here. So I really think people ought to pay attention as we move from here. It seems like, and I hope that a lot of us are keeping an eye on this to hopefully prove that we have the momentum to keep us going this direction. Because if we do, it's going to be bullish for Bitcoin in the next year or two. But yeah, to hit some of these types of data points, it does seem like we're going to have to hit much higher PMI values. So it's a question of momentum right now, right? Because these green dots are the second half of Bitcoin's life. So there is diminishing returns, folks, at the tops. So what we're really going to want to see is a printing of at least 55 to start seeing some upward price movement. As high as 65, ideally. I mean, as high as possible. So we kind of want to be in this range. Again, not a direct driver, but this is an excellent U.S. economic indicator. And the economy itself, what I'm saying is, in very simple terms, the economy is itself doing a lot of the work here these days for the Bitcoin bubbles. So let's get on to the next thing. This is this is purely visualization, so not a whole lot of math going on here other than what I did was I took this is log space. So the white line is the straight line that you can't unsee. Whoops. It's a straight line that you can't unsee with Bitcoin, right? Notice how perfectly straight it is. I'll just use my laser pointer here. And you've got all the normal price data for Bitcoin overlaid on top of it. That's the orange data. Okay. And then you've got, what I did was, I'm making the Bitcoin power law support line equivalent to the 50 threshold of PMI. Does that make sense? So the values above that line are over 50 for this shaded line, shaded area. And then you can see it drops below and turns red. That's when PMI was in a contraction. Look what Bitcoin's price was doing. And again, the first half of this data, the R squared was 0.17, but it was ever increasing. R squared was ever increasing from here to here. Simultaneously, PMI was also crawling up. I mean, they're pretty well in sync already. And then after 2016, you've got to fall back down into a brief contractionary period. So the trend of PMI goes down, the trend of Bitcoin goes down. Now PMI quickly starts to pick back up again, going into, from 2017 into 2018 for this next bubble. Look what Bitcoin's price is doing. And then there's a sheer drop-off. There's a pretty quick drop-off of PMI. And Bitcoin's price, voila, is struggling in this same period, in this same year and a half. And then we go back into another bubble. I mean, look how in lockstep this last bubble that we had in 2021 was. Again, there's some lag, but the rise and fall, it's pretty uncanny. Now, here's what's happened for the last 3 years, which I might have already hit on ad nauseum. But we've been in this ugly contraction, historical for PMI. And Bitcoin has tried to break into another bull market, but it has struggled. To be honest, it's sort of reminiscent of 2019, when we were in an ugly short-term contractionary period from PMI. Bitcoin tried to launch, but it had a hard time. Didn't quite reach fruition. So there's something going on here. I think this connection of like when you are in unfavorable economic conditions, whenever that is, Bitcoin, due to FOMO, due to whatever attention it's getting, even some network drivers, can try to launch, but it's not going to it's not going to reach its full potential. Yeah, that's the story of a thesis. It's not fully fleshed out. It's not fully validated. I think this is still exploratory, but I think there's a good case here that the business cycle is ever becoming a stronger driver of Bitcoin cycles and might foundationally prove to be what we need in order for Bitcoin to do its launches, upward deviations away from its power law trend. I didn't talk much about the power law itself today, but I'm going to be doing a lot of that in the future, I promise. But thank you guys for tuning in to my first YouTube video. Thank you so much for following me. If you are, if you're not, follow me on X, at Sminston_with. And now follow me here on YouTube, which I assume you're going to click subscribe right after you're done watching this. Hope you do. Last announcement is, this is a big week. I officially have paid subscriptions on X, and if you are gracious enough to follow me and you're interested in more quantitative analysis from me, click subscribe on X. It is right now $20 a month. And what you're going to get is every single week, you're going to get a full deep dive quantitative analysis related to Bitcoin every week that is not going to be available to the rest of the public. If you're a subscriber, you're going to get an exclusive, not available to the public analysis once a week. That's 4 per month. Hoping down the road this turns into something more of a newsletter, but you know my style. You know that I tend to do these things on a weekly basis. So please subscribe both places. Would greatly help in supporting me continuing to be able to do this full time. Right now I don't do it full time, but I try to do as much as I can. Thanks for following along on this journey. Keep following the data. Keep stacking early and stack hard and all of that. And I will see you guys back on X, and I will see you next week on YouTube. Thanks.